Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. Today is September 2nd, 2025. We'll talk about some of your favorites like Bitcoin, Solana, MicroStrategy, Tesla, even throw some Ethereum in here, some pair trading, and the MicroStrategy preferreds. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy, G Dinero, helping you increase your financial literacy to help put you and your family on that path to financial freedom. And before we jump in, special thank you to Lexi Lynn 3574. She said she appreciates this weekly video, this TA Tuesday that we did last week, and looks forward to watching it. And then went on to say that she does her own TA and compares it with yours, placing her trades and collecting the income. Covered calls are da bomb. Thank you, Gary. And I said, I love hearing this. We do. We have our own money printer, just like JP and the Fed. And I said, laugh out loud. And she said she could hardly believe how effective it is. It works when MicroStrategy is here or at 400 or 450. Tesla has great premiums too. She's becoming more proficient at trading covered calls. So Lexi Lynn, congrats to you for the success that you're seeing as a result of some of the things that we've discussed in the past, and keep it going. Keep on rocking it. And like you said, let's keep that money printer rolling. So with no further ado, let's jump into the charts. All right, as always, first up is the Bitcoin TABI model. You'll see the TABI model is still light orange right now, and we are sitting on the short-term holder cost basis. You're going to hear that come up a lot in today's video. We'll talk a bunch about that on the daily and the 4-hour charts as well. But notice that we are still light orange. Remember, there's still dark orange, light red, and dark red to go. So we are anything but overheated right now. If you look, the Meyer multiple is back down to almost 1 right now, which is very low. MVRVZ is back down near 2, which is also very low. And last but not least, the historical volatility started to pick back up again. We see this little bump right here. And then we dropped right back down. We're back down at around 32 right now on the historical volatility, which for something like Bitcoin is actually very, very low. If we go over to the daily chart, we've been in this structural uptrend since April the 7th, right? Since the tariff tantrum was, quote, resolved. We've been in this structural uptrend. You will note that we made a high back here in May. We went up to about 111, 112. Hit that level a few times, finally busted through it, and have come back down to retest it as support. Exactly as we discussed in, I think it was last week's TA Tuesday and the week before. I've been saying for a while now, this is the zone of support. For us to go all the way down to 107, the crazy thing is this box, I haven't changed it, and we wicked down right to the bottom of the box. So that area of support is where the buyers are stepping in very strong. The minute we get down to 107, 108, the buyers step in and bring us right back up to 109, 110. This entire area right here, remember, had very little volume initially. If we move and slide this over to simulate what did it look like going into that time period, let the VRVP reset, and you can see this giant hole right here, this hole right here where there was hardly any volume going through. All right, that filled in as a result of the most recent trading. So keep an eye on that 112 level, this level right here where the hole is, and bang, you see it fill in. What that shows you is all of this volume that we've done recently filled in part of the gap that was here. Now there's actually less volume in between 110 and 114. 110 level, that's filled back in. 109, that filled in. 110, that filled in. Even a little bit right here at 111 filled in. Right here at 113 filled in. So there's still a little bit more volume that needs to fill in. That will, as Bitcoin climbs back up again, it'll start to fill in this VRVP over here. That's what I mean by fill in. VRVP, Visible Range Volume Profile, for those of you who are asking. That's available in the course. I talk all about it. You'll note that we are mean reverted to the downside on the daily chart for Bitcoin. We also came off of RSI levels up above 70. We never made it back. Well, yeah, we did. We made it just back below 30 here, it looks like. Let's put a number on that. 37.66, 38.79, and 37.84. So no, we didn't make it all the way back down to 30, which is the dotted line here, but it's still oversold. It's in the oversold range, just slightly oversold right now. Liquidity, we look at this every week. We started to go up again and then just tailed off for the last couple of days, right? Just tailed off in the last couple of days. But we are still up here near where the all-time high is. This line right here should get moved up just a little bit. I think I need to unlock it. Yep. Unlock it. We'll move that up so that it tags the top of that and then lock it back down. So that's the high that we've hit. We came back up close to it here, close to it there. So the liquidity is still very high, still pouring in, so to speak. But right now, Bitcoin, I would say, is in a bit of a holding pattern. Here's what it looks like on the 4-hour chart. On the 4-hour chart, you can see it much more clearly, that area of support that we talked about. Notice it's resting right on the short-term holder cost basis. That's currently at 109.062. I get those values from Check On Chain, James Check, over there at Check On Chain, or Checkmatey. He's a great guy. But those are as of today, as of the 2nd of September. For my Europeans, that's not February the 9th. That's the second day of the 9th month. I know the Europeans write it separate a little bit differently. Still considerably above the 200-day moving average. 200-day moving average is down here at 101. Guys, that's the floor right now, I feel like. That $95,000 to $100,000 range. Why do I say that? If I back out and I take a look at how much volume transpired there, watch this area fill in. It's actually the area with the most amount of volume. Notice that's called your point of control on the visible range volume profile, and that's sitting right around $96,000, $97,000. This massive chunk of volume, all the blue you see, those are buyers willing to step in and buy the dip, to put the floor in, so to speak, right? So right now, that's the absolute bottom I see. We would support on the 200-day moving average, I believe, before that. And even before that, there's a pocket of volume here at 105 that would act as a floor. So support to the downside, 105, 101.5, and $96,500. To the upside, what do we need to get through to the upside? Well, we need to go back up, and we'll start running into resistance around 113 or so, as well as this local point of control, meaning for the shorter duration time period over the last just few months, the point of control has been $118,000. So once we get back up into this resistance zone, first the 100-day moving average at 112 will act as resistance. Then we'll have a little bit of volume here at 113, 114. We've got the 50-day moving average at 116, and finally this $118,000 range that we got to bust back up above. So right now, it's this push and pull between the bears and the bulls. That's why I put a sideways arrow for Bitcoin. It, relatively speaking, is going sideways and consolidating at these levels, building before, in my opinion, the next run up with Bitcoin. Solana Bitcoin pair, Solana Bitcoin pair. We had a lot of action. Look at this. We jumped all the way up here, finally breaking up out of this support zone that we've been in for the longest time. We didn't quite make it up to the next area of resistance, which is all this volume that you see here, but we made it partially there. And that was a nice little bump right there. It shows that Solana is starting to come alive. Also, what you'll note is I believe we put the absolute bottom in for this pair. That means that Bitcoin is done outperforming Solana, and now it's time for Solana's chance to shine. How so? We put in a high. We put in a higher low. We put in a higher high. Right now, it looks like we're going to put in a higher low and maybe and rebound off of this giant volume cluster that we have down here. If that's the case, then we're off to the races. And I anticipate that this will eventually start making its way back up again, back up to at least 0.003, which is where we were last March. So about a year and a half ago, we were up there in that 0.003. The historical high for this pair is 0.0046, which from where we are right now at about 0.0018, That's a triple from where we are right now, roughly. I'm exaggerating that maybe a little bit. It's like 2.5x to 2.75x from where we are right now. We are a little bit overheated. You'll see that on the mean reversion. We are in that 1 standard deviation to the upside. So anticipate a little bit of a pullback. We may even pull back all the way down to the 200-day moving average and retest that. That would not be a bearish sign. That would actually be a very bullish sign to come down, retest the 200-day from the upside, use it as support now instead of resistance, and then break out and start setting new local highs. Solana on the daily chart. We've been in a structural uptrend since the end of 2022. That uptrend is still intact. We are nowhere near the all-time high of 295. We're all the way down here right now sitting at 198 to 200. But the cool thing is we have now turned this 180, this 175 to 180 range, in my opinion, from resistance into support. Every time we've broken back down into this range, we've popped back up again. We are slightly mean reverted to the upside on the mean reversion model, but on RSI, we're sitting right around 50. So we're right in the middle of the range that we would expect to be in, slightly overheated if we look at the mean reversion model. We are well above the 200-day moving average on Solana on the daily chart. If you zoom in onto the 4-hour chart, you can see we've been testing this resistance zone that I've had there since way back in early to mid-July. That's been our resistance zone. That's right around that 210 to 215 level. I anticipate that will remain resistance for now, but no longer is the support zone, I feel like, extending all the way down to 165. I would focus on the top of this support zone, which is 185. We've retested it here. We've retested it several times and broken right back above it. So right now, immediate support is where the 50-day moving average is, and also the top of this block of volume. That's around 185. The point of control for the last, let me go back to about right there, and I bet it'll still stay pretty close to where it is. Yep, see this red line going across the screen right here? That's at 177, 178. That is, I believe, the current floor right now. Could we wick below that? Absolutely. But that area is super strong support. Every time we go down to 177, 178, we bounce right back up from it. We bounce up from it. We bounce up, bounce up, bounce up. We didn't even make it down that far. We only made it to 185 this time, bounced up. So really good things on the horizon. 9 new ETFs coming out with Solana shortly. Well above the 200-day moving average and the 100-day, which are down here. Again, resistance to the upside is 210 to 215. Just slightly mean reverted to the downside, but I don't get out of bed for a 0.25 standard deviations to the downside. That's nothing. Same thing with RSI, just barely below 50. We're essentially at the mean right now. We are that tells you Solana is appropriately priced based on all the conditions, all the technical conditions right now at around 200. Here's a newbie for you guys. People ask me to throw ETH in here. ETH is one I haven't looked at, guys. I was an ETH-aholic back in 2020, 2021, actually going all the way back to 2017, 18, 19. I had been accumulating ETH. I sold a bunch of it back in 2021. Unfortunately, after the peak and when it was on its way back down again, I didn't have that mentality of taking profits on the way up. I also got liquidated back then by doing too much of the leverage trading, but I learned a lesson. It was good to learn the lesson then. I haven't made those same mistakes in this market, which is nice to see. So ETH, we were way overheated on like August the 10th. Now, something to take note of. Notice how overheated we were, but yet the price kept going up while things like RSI were going down or the mean reversion was going down. That's called a bearish divergence. What that means is the price is still going up, but the strength of the move is starting to go down, right? You see that? Price still going up, the strength is going down of the move, right? Whether you're looking at it on the mean reversion or on the RSI. That's called a bearish divergence. What that typically results in is a sell-off, which is not surprising that we sold off and pulled back. We took another run at it, just cracked a new all-time high, and then pulled back again. So right now, Ethereum is having significant resistance at the previous all-time high. It's also a psychological level because it made it to 49.5590. Call it 49.56, which is just under $5,000. $5,000 is a massive psychological hurdle for Ethereum. Okay, it's kind of like the $125,000 for Bitcoin, psychological level, right? Big hurdle. What do I see here? We're slightly mean reverted to the downside. RSI is below 50, so we're pulled back just a little bit right now on Ethereum, but relatively appropriately priced where it's at per all these models. You'll note on VRVP, we're sitting on this large cluster. What would be support to the downside? 50-day moving average right here, the 78.6% fib level, and or going down here towards about 3750, where there's another large volume cluster that extends all the way down to about 3600. So 3600 to 3800 is the major support. Could we pull down to there with Ethereum? Yes. I don't follow the story very much. I do know that I think it was Bitmain is the name of the company with Tom Lee. That ignited this whole Ethereum move, right? That and the ETH treasuries. There was a huge rotation from Bitcoin over into Ethereum. It looks like some of that rotation is rotating back either out of Ethereum back into Bitcoin or over into Solana. You see Solana starting to increase in preparation for those Sol ETFs that are coming out. So anyway, that's a quick outlook on Ethereum. It's kind of fun to do because, again, I traded it many years ago, but haven't done anything with it since. So kind of cool to take a look at it. Popping over to MicroStrategy. MicroStrategy on the daily chart. Here we are with the MNAV. The MNAV hitting relatively historical lows. When you look at it, guys, we haven't been this low since all the way back in February and in May of 2024. Not the recent February and May, a year and a half ago, February and May. So these are historically low levels of MNAV. But if you were to look at a lot of the other companies, every MNAV of just about every treasury company that I looked at are doing that right now. They're all starting to gravitate back towards one, right? That's a 1-to-1, meaning no premium on the Bitcoin that they own. That's what a 1 MNAV is. So a 1 MNAV right now for MicroStrategy would be way down here at 221. Do I see that happening? No. It looks to be finding support right here on the 61.8% fib level, which is right around 335 to 345, somewhere in that 340 level. Looks to be finding support there. Although if we dig into on the daily chart, we still are in a structural uptrend up and to the right. But if we dig into the 4-hour chart, you'll note that we are mean reverted to the downside, but the price is still, the trend is still going down right now. It has not convincingly flipped to the upside, right? We'll see when the market opens today what happens, but we are mean reverted to the downside. RSI is below 50. MACD started to cross over. It's kind of waffling along and just trading sideways right now. Where would we go if we broke down from here? What would be the next level down that we could potentially break down to? I see that being this somewhere down around the $300 level. If we were to break down any further, do I anticipate that happening? No. Anything is possible. I believe that MicroStrategy is poised for a breakout. At least getting back up to the 200-day moving average of 355 to 360, right, on the minimum. But we still have to think about where could it go down to on the downside, down here to 300, where there's a volume cluster right here. It's also a psychological level. What's resistance to the upside? First is going to be this 200-day moving average right here at about 357, 358. And then we've got to get back up and break through this 370, like 372 or 375 up to 405 range, right? So 400 being right in the middle of that. We've got to break back through this resistance zone that you see here, get back up above that, turn it into support, and then take another run at 425 to 450. So if you're doing covered calls along the way, keep that in mind, right? We've got to get through 400 first. That's immediate. That's short term. If you're selling weeklies or bi-weeklies, that's the immediate resistance we've got to get through. If you're selling monthlies, you might want to buy yourself a little bit more distance. Right now, I wouldn't be selling a lot of covered calls on MicroStrategy because it's so far mean reverted back. That's not the time you want to be selling covered calls. You want to do it when it mean reverts to the upside. If we move over to the daily chart on Tesla, here on the daily chart on Tesla, we are still in a structural uptrend since April 7th, right? You'll notice that we are moving up on the daily chart. We're starting to put in a series of higher highs and higher lows, right? Albeit just a little bit since July 7th. Higher high, higher high, higher high, higher low, maybe a higher low. Looks like we're going to support on the 200-day moving average. I think I called that on last week's TA Tuesday that although there are great things on the horizon for Tesla down in the long run, you could potentially save yourself $5, $10, $20, $30 a share by not buying these tops, but instead buying these local bottoms on the pullbacks. Shows up a lot better on the 4-hour chart. If we dig in here and we look, we keep dancing on either side of the 200-day moving average. Here it was resistance. Here it was support. Here we broke down through it. It was resistance. We supported on it. Broke down through it. It was resistance. We came down and supported on it. Broke down through it. Went straight back above it. And right now back down below it again, right? So on this immediate extended hours trading view chart, we are back below the 200-day moving average, which is sitting at 330, and Tesla is back down at 327. So again, am I bullish on Tesla? Absolutely. I'm bullish on Tesla out through 2026 and 2027. Not necessarily in the next few days, weeks, or even month of this year. I think we have more of this waffling going on right now. Every time we've made a run at 350, 360, it's been insanely difficult to break through those levels. Every time we've gotten up there, I've sold cover calls and bought them back and made 60, 70, 80, 90% profit, sometimes letting them expire worthless and making a 100% profit. So that's the key. That's the name of the game right now, is accumulate on each of these pullbacks. Every time we pull back to a moving average, right now we're closing in on the 50-day moving average right here and this local point of control right here at 320. I think I said on last week's video, anything at 320, 330, that's a buying opportunity, right? Versus buying up here at 350, you're just paying basically 10% more for something that you can get at a 10% discount every time it pulls back right here. We are starting to mean revert to the downside. RSI is making its way down. It's down at about 40 right now, making its way down towards 30. MACD is starting to flip down to the negative. There's no crossover in sight. So wait until you see this thing throw in a green dot down here. Wait till RSI is below 30. Wait till you see the MACD crossover. Wait until you see us bouncing on a level of previous support, which is down here, this big cluster of volume. That's the perfect place to go ahead and add to your position. Not financial advice, just what I'm doing on Tesla on the 4-hour chart. Nvidia, well, it finally broke its uptrend, right? You'll notice that it is below this. It's spent the last week or so mostly below this linear regression channel that we were in. It used to be a 98% fit. It's 97.7. You'll note that RSI finally came down from astronomical levels and is making its way below 50. You'll also note that on the mean reversion, we are starting to mean revert down towards the mean, or down towards zero on the daily chart of Nvidia. If we go over to the 4-hour chart of Nvidia, one of the largest mean reversions to the downside that we've had right now, today, since all the way back here on April 7th. So if we zoom in on that, you'll see we are well below this linear regression channel that we were trading in. 185 did act as considerable resistance, as we talked about. The point of control is up here at 180. And right now, this is back down at 170. I said it could potentially pull back to this 170 to 175 range. It did last week, and it's doing it again this week. So if you've been looking to add to your Nvidia position, what you're looking for right now is for it to put in a green dot on your mean reversion. You're looking for the RSI to drop back below 30, which we're super close. You're looking for it to find a bottom right here, and that's the time to go ahead and get some Nvidia. I'm going to look to maybe nibble on a few shares because I have only options on Nvidia right now. I don't have any shares, but I may go ahead and nibble a few shares right here just to start a little bit more of that rotation from Bitcoin related things. Like I still have Clean Spark and some of the other Bitcoin related plays. Start swinging some of that over into Nvidia now that I have an opportunity to do so, right? Now that Nvidia has pulled back just a little bit. If we make our way over to the MicroStrategy Tesla pair, this is the infamous pair that, again, if you follow Invest Answers has only been going from MicroStrategy to Tesla, trying to do it up when we're up in this range up here, right? That's because his MicroStrategy position was twice the size of his Tesla position, and he believes in Tesla more for the next 5 to 10 years, right? So he wanted to get the Tesla position at a minimum up to the same size as the MicroStrategy position, if not larger, which I think it is now slightly larger. For those of you who are not trying to only go one direction, but going from MicroStrategy to Tesla when the indicators and the technical analysis tells you to do so, right now is one of those opportunities to go from Tesla to MicroStrategy. And again, I know I've said that before. We started to make the flip here and then went down even further. But if we zoom in on the chart where we are right now currently, and we take a look at this, you'll note that the trend has actually definitively flipped. We are blue right now. Now, we're still in pre-market when I'm making this video, at least for another 13 minutes. So I'd be curious to see what this does at the open. But we're coming off of being significantly mean reverted right now. Right now, we've got the flip. You could have gotten a 0.99 or a 1-to-1 ratio. Now it's already up to 1.02. I would not be surprised to see this go back up into this 1.15 to 1.25 range. Somewhere back up into here. It may not sound like much. You may say, well, it's not even worth making the trade, right? But if you're doing it in a tax-free environment, even from where we are now up to, let's say, the middle of that range to 1.2, that's an 18% increase. That means if you sold Tesla for MicroStrategy and then flipped the MicroStrategy back into Tesla, you'd have 18% more Tesla. I don't know about you, but without having to add any extra money to my bag, I'd love to have 18% more Tesla for free. Again, that's taking out the tax ramifications of doing so, but that's how this pair is done. Stay tuned. You might see a little bit more about pair trading coming out in the future. I'm just going to kind of leave it at that. I know there's a lot of people out there kind of teaching it right now. That was my jam from back in 2021. I think I did a post in the Invest Answers community called Pair Trading. And believe it or not, back then it was between MicroStrategy and Google. And I pair traded most of my Google out into MicroStrategy, which was the exact right thing to do. Google went up, but MicroStrategy just dominated over the last 3 years. Then I started pair trading MicroStrategy and Tesla, and the sky's the limit with those two when you go back and forth between them. But right now, signals are showing going from Tesla to MicroStrategy, if indeed you're following that pair. Here's the MicroStrategy Bitcoin, i.e. IBIT. I just use that as my proxy for Bitcoin. And what you'll notice is I did swap. I threw it on here, 100 IBIT for 18 MicroStrategy. I think I did that swap after it had pulled back. Actually, right here, right there is where I did it back on August 19. It went back up where I was in the money for a little while. Now I'm back down below. It went back up in. It's waffling back and forth. That's because MicroStrategy is in the cloud. It was below the cloud. When it's below the Arb cloud, that's where you want to go from Bitcoin into MicroStrategy or from IBIT into MicroStrategy. When it's way up here above the cloud, that's when you want to go from MicroStrategy into IBIT, okay? But having these two side by side, it really shows you over here with IADSS, there's no sell flag right here, but that's a clear sell signal right there to me. We were out the top of the cloud. We were mean reverted to the upside. All of a sudden, the trend went from going up to flipping to the downside. So even if you got out somewhere right there and didn't nail the absolute top, that would have been a place to go from MicroStrategy into IBIT. On the other hand, down here, right there is perfect. That's textbook. Huge green mean reversion dot, buy signal over here, and then we had the trend flip right here. Where does that correlate with over here when MicroStrategy started to go back into the cloud again? Right where it starts to enter the cloud again. Perfect time to go from IBIT into MicroStrategy or from Bitcoin into MicroStrategy. So keep that in mind. This is another great pair, especially if you're in an IRA, to go back and forth. You can't lose, I feel like, with this one going between MicroStrategy and Bitcoin. Unless we go into a deep bear market, both of them are going to suffer. You're better off being in cash in that example or in a different asset that's not being affected by the bear market. Let's say it's Tesla in that example. I got a little bit of flack for not showing the rotation model last week. The rotation model, nothing new. You'll note there's no circle or check mark in front of these last two. It's because I had already rotated into MicroStrategy. That's what it said I should be in. Right now, I really didn't have anything left to rotate. I was pretty much all in on MicroStrategy right now per the rotation model. And it's just hasn't showed anything other than a MicroStrategy symbol since August 4th. So we're at about a month right now without it telling us to move into anything else. It's, hey, it is what it is. It's a long-term game with the rotation model. I feel like I do have mine set to daily, which means this is me looking at it over the next couple of years, not what it's going to do in the next couple of days, weeks, or months. So I'm okay with that. Again, it's just a trial for me. I have less than 5% of all of my investments in the rotation model per se. Last but not least, we're going to look at the preferreds. STRK got waxed, right? And remember, we said the reason it dropped below par value, STRK, that's the one that's convertible into shares of MicroStrategy at a 10-to-1 conversion ratio. That's the market saying the likelihood of MicroStrategy going above 1,000 is low, so it's not worth it to buy STRK and only get an 8% yield if MicroStrategy doesn't go above $1,000 a share, right? That's where it makes sense to convert 10-to-1, 10 STRKs at a par value of 100. 10 times 100 is $1,000. That's where it makes sense to lock in that conversion premium is once we get over 1,000. Below 1,000, it's really an 8% yield, which is lower than most of the other ones are paying out right now. They're paying out 9 or 10%. So that's why we lost the par value there. STRF is still trading at a premium of about 10%, right? It's at $110 a share instead of at $100, and it pays out a 10% annual dividend. So it's trading kind of right where you would expect it to, which effectively lowers the yield, right? It lowers the yield to about a 9% yield because you can't buy as many shares of STRF, at 110 as you can at 100. So thus, your effective yield is slightly lower. You're not getting paid 10% annually. You're theoretically getting closer to 9%. So it makes it very similar to STRC. STRC, you'll notice, paid out a dividend. It sold off massively, which all of a sudden brought it all the way down to a low. I can't read the low there. 92.21. It wicked down to right back up to the zone where it was before, which was around 97 or 98. Not surprising. I anticipate it's going to spend a bunch of time there in this 97, 98 range, eventually trickling its way back up towards par value of 100, which you see up here. When it's trading, when STRC, I don't do STRD, so I'm not even talking about it. It's a junk bond grade, and it's struggling. It's down at below 80 right now. So that's a trade. That's if you wanted to maybe buy it there and hope and pray it makes its way back up to 85 to 100, and you want to flip it for that percentage gain, have at it, right? And along the way, maybe get a 10% dividend. So that's why I don't focus on that one. STRC pays out a 9%, but it's paid out monthly. That'd be 75 cents a share per month. However, because it wasn't at par value, last month paid out an 80-cent dividend. So we just got those over the weekend, right? It was paid out on August 31st. So we just got all these STRC dividends. Look for those all to get reinvested back into STRC for the people that are doing DRIP, which is a dividend reinvestment program. So I wouldn't be surprised to see those all start getting reinvested back in. And that's why STRC shot back up again, because all those dividends get reinvested. It's a bunch of buying pressure that goes in. I bet that Saylor also used that to sell common stock of STRC over the weekend or over last week, which was what was used to buy more Bitcoin this week. All right. So that's STRC, or the MicroStrategy preferreds. Whew, that's a lot of information, guys. I hope you enjoyed this today. If you did, please like this video. Drop me a comment. What'd you like best? What did you learn today? What would you like to see more of? And make sure you're subscribed to the channel so you don't miss any of the videos that I put out. I just put out a sale flyer, so to speak, video yesterday. Go ahead and check that one out, where I put all of my courses on sale. I'll tell you right now, all of the coupons are gone except for the 20% off ones. We had a massive response to the sale. So that is where you can go ahead and book an appointment or book a course with me. I do a course on TradingView and technical analysis, along with a course on understanding options. Again, to find those coupon codes, just check out the video that I made last week. I'll go ahead and link it a second time right here. Not last week, yesterday. Made the video yesterday. But if you want to know what the coupon code is, it's LABOR20, LABOR 20, and you'll save 20% off either of my courses, TradingView Technical Analysis or Understanding Options. That coupon is not good for individual coaching. And again, guys, thanks for tuning in today. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.